Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, July 20th. We are going to review a lot of earnings today, but real quick, let's review the economic data that came out today. Jobless claims came lower than expected. That's not good because it still shows signs of labor market being really tight and strong. 228,000, we were expecting 242, higher than the previous one. And as you can see, the trend continues going lower, and we don't want to continue in that trend. Continued jobless claims came higher than expected. And if we check the trend, it's actually starting to reverse. We want this trend to increase to really show Fed that the labor market is cooling down, and it's not showing that strength that it's been showing for almost a year. Existing home sales month over month came minus 3.3%, still showing, look at this, every negative, every month over month, except this on February, came lower and lower and lower. And certainly the home sector is being impacted by the high rates on interest rates on mortgages, the 30-year mortgage. So this is something that it's good for the overall economy, the cool down of the home sector. But if you are trying to buy a home, this is more and more difficult. So now that we covered the economic data, let's now jump to the actual earnings. Yesterday's after the close, Tesla, Netflix, and United Airlines and IBM reported earnings. We are going to start with IBM. IBM report earnings beat but misses on revenue. And we are actually, look at this, 1548 versus 1558. Net income for the quarter rose 13%. And the adjusted gross margin up of 56% was higher than the street account of 54%. So if we check the chart, let me show you the chart. Investors are quite happy. IBM is 2.53% in the green. And if we check the daily, this is being consolidated since a lot of years. So IBM is a really solid company, and it's showing not signs of growth, but it's showing that it's able to really cope with the difficult times that we are going through. What else? Now we are going to review United Airlines, another airline. United Airlines post record earnings with strong profits due to summer demand. It's something really real. 5.03 EPS versus 4.03, 14 billion versus 13.91 billion. A 26 lower fuel bill helped boost United's bottom line. So we have also to take into consideration the price of fuel for these airliners. Let's go check the charts. United Airlines, it's almost 4% on the day. If we check the daily chart, this is the fall on COVID pandemic. Since then, most of the airlines are trying to reclaim these levels. And certainly with this structure here, higher lows, and now this push on earnings, 4 earnings in a row in the green for United Airlines, I think investors are more and more liking the airlines. And if we open to the worldwide recovery for the economies, I think airlines will for sure show strength and will be able to reclaim those levels before the pandemic. Next one. We are going to talk about Netflix, the first big one. Netflix earnings jumps because subscriptions jump 8%. Revenue climbs because password sharing crackdown takes all on some of them. 3.29 versus 2.86. Really big. It added 5.9 million customers during the second quarter. And the password sharing is something that investors are really waiting for. The earnings report comes soon as investors look for more information on the rollout of Netflix ad-supported streaming tier and push to boost subscriptions by rooting out account sharing. That is something pending from Netflix, and I think that paid a lot of reason. That's the reason why I think yesterday we sold off. Investors are waiting, looking forward for those plans of rolling out for the subscription ad free, and I think they are really waiting for that for Netflix to really show that they are going to boost subscriptions with these new ad tiers, and it's actually 9% in the red. This is something, one of the causes for the change in the overall sentiment. And if we check some additional news, earnings showcase strength in terms of revenue and EPS because the rest of the media industry struggles. But this is not enough. Adding subscribers is not enough for Netflix because they need to roll out this crackdown on password sharing and also launching the cheaper 6.99 per month advertising tier. This will boost earnings for sure, but investors I think are waiting for actual news from them. So next one, the big one from yesterday, Tesla. Tesla shares dip after hours as earnings call disappoints. Tesla posted all-time high quarterly revenue, but operation margin dropped 9.6%. Revenue from Tesla core automotive business rose 46% year over year, about a 6.5 increase, but the development and research cost rose from 771 million to almost 1 billion. So the main cause of falling for Tesla, it's not that it's gaining money, but I think they need to ramp up production, and part of the reason why they are coping with the revenue is because they lowered the price and increased the demand on some of the models, and that move was to reinforce the strength for other competency for other car markets, but I don't think that's good enough for investors. If we check Tesla gapping down, let's mark that gap down together. So Tesla is really tricky up here. Investors want growth, want revenue, and they are not showing that by decreasing the price in order to meet the demand, increase artificially the demand. And as you can see from this was yesterday's move after hours, big drop from Tesla. Price range 5.68 yesterday, and today it's 7.29. So really tricky daily on Tesla. I think a lot of people was targeting 300 up here with options, and I think this changes everything because this changes not only the sentiment from Tesla but also the outlook for the rest of the tech stocks. Let's continue with some earnings from today before jumping into the charts to analyze the overall market. So today, TSMC, it's real quick, first profit drop in 4 years because electronic demand is going lower and lower. So this is Korean, this is not trading on the US stock market, but this is the message. Demand destruction in the electronics basically causes TSMC to drop for the first time in 4 years. take that into account. American Airlines and Johnson & Johnson. American Airlines posted obviously strong second quarter and big forecast for 2023. If we check 192 versus 159 on the EPS and 14 billion versus 13 billion, the company's forecast include costs from labor deals like a tentative agreement with pilot, because American Pilot Union are seeking improvements on tentative contract following the strike on last week's. And in regards to wages, they want more, so they are trying to strike a deal. And in terms of numbers, the Texas-based carrier expects to earn between 3 and 375 a share for the full year. That's the updated 2023 profit guidance, and falls in line with Wall Street expectations. And when you fall in line with Wall Street's expectations, sometimes you do well, but some other times I think you just need more from the markets. So if we expand our view, this is the fall after the pandemic, and then American Airlines is trying to reclaim that. United Airlines is already some signs of some bits appearing, but overall, the airliners are not yet, despite the huge demand for this summer. So despite the strong consumer spending, airliners are not there yet. So take that into account for your investments. And finally, Johnson & Johnson beats on earnings and hikes the full year guidance. Johnson & Johnson, it's health insurances that the increased demand has been observed by health insurers like United Health Group and Elevate Health. So this strong demand, J&J results, look at this, 2.80 versus 2.62 and 25.5 versus 24.6. Nearly 5% up in the trading, and despite the fact that Johnson & Johnson, it's been quite beaten down since the start of the year, it's not as other tech companies. And look at this huge candle. So 2023 started here, it dropped, it gapped up on earnings, they drop again, and we are doing higher lows into this W reversal. Perhaps we are headed towards 180, that was January levels this year. So good plans and forecast for Johnson & Johnson. Now we finish with the earnings for today. I don't think today after the open it's something worth noting. Tomorrow, American Express would be worth watching to really gather some numbers and data from the consumer spending side of things. But let's now jump into the charts to really perform some technical analysis and to really gather insight from other markets. This is the Nasdaq overall daily chart. January 2022 tapped. This is the first sign of big resistance that we are seeing. December 2021, it's up here at 16,500 more or less. But January 2022, it's really a big visual level. We check the NQ, this is the level and this is the other level. It's all-time highs for Nasdaq. So take that into account when you are trying to adjust your expectations, because that's there. The ES, it's also basically there at March 2022, the second pivot at 46.25, and then we have all-time highs at 48.08. So we are there in both indices. Now, let's go to the 30-minute chart to really see where we were supposed to be today and where we are heading. This was the push on Microsoft news, yesterday's chop, and Apple destroying the Nasdaq AI hype, and now today gapping down, and look at where we are right now. I'm mark up this resistance level that was the first consolidation towards the second leg up on Tuesday, Microsoft news. We were quite near on the close and also on pre-market high. So I was watching this level very close. Then we have last week high down here that we supported on the pre-market action. And then we have this previous resistance is supposed to be support at some level. And I have these two levels charted and we started rejecting those right at the open. We pushed higher and we found out that pre-market high, prior lows, and this level was being rejected. And once we crossed down, we broke down pre-market lows of today's pre-market lows. That was really the big leg down. So now, sometimes this is super tricky to just jump in or find a good entry in this kind of trend days to the downside after the bullish sentiment that we have in the last weeks. But one level that it's worth noting sometimes, and today is one big example, it's the opening print. This is the opening print of Nasdaq. And as you can see, up here, we started shopping around. This is not the way. You have to be patient up here because things can go up or down. And you have to really, if you want to trade this chop, you have to really have high stops and very good risk management. But it's better to wait for some key levels to really show the trend. And my key level was breaking down the opening print and this retest. Look at this beautiful retest. This was a pretty nice entry short with the stop up here and the target at least the support at 15,700 of this level. This is the opening range, the opening support on the Microsoft day. So we are not even tracking that. We are, because that's 6.5. First, we can track pre-market high for 1-to-2 ratio, and then we can trail down. And in this trail down, it's really momentum to the downside. And this can really provide you with a nice runner, because basically they are just flashing down, flash after flash after flash. This is strong sellers accumulating up here, breaking down, re-adding, and you can just let it go. This is my recommendation for days like today, in which it's really difficult and tricky to find an entry. Just try some key levels, manage your stop, manage your risk, and if you have consistent entries like this, you will be profitable for sure. So overall, where we are right now, we are in the middle of this. We are now trying to reclaim with higher lows the EMA, but I don't think the Nasdaq is able. We are just bouncing from Microsoft days 15,700. We are in the middle of nowhere down here. We are at support. I don't think we can go lower. It might, but be careful with your longs, because pre-market lows and this pivot on the opening might be tested, or this one that we had earlier at this pivot, and they might smack again the Nasdaq down. So adjust your expectations today if you are bullish, because Apple, despite yesterday's big move, look at where we started in the overnight. We retraced the whole move down, and then up and then down. News look good, but Apple has nothing released. So be really careful trading these catalysts until something factual appears on the market. because this is just FOMO, and this kind of moves 100% retracements in a row. These are nasty. Microsoft minus 1.43, really affected by the Apple's news. It's not completely retraced the Microsoft day, let's call it. That would be 344.60, but we are seeing signs of strong selling, or at least strong profit taking. If you were in Microsoft yesterday and the day after, the day before, what would you do? I would sell for sure, at least partials. And I think that's kind of the thing here. And that's why in my yesterday's video, I talked about Apple killing the AI FOMO. Look at this. This orange dot line is last all-time highs, the previous one. We got this, and then the prior one was this one. We are even rejecting that one. So Microsoft, really weak. Tesla, you know the deal. We already reviewed that. Tesla is nowhere near support. It's trying to accumulate down here. Where? 271, 270 something. There's nothing anchored here. We might continue going down to 267, in which we have this structure from 2 weeks ago. So in the 1 minute, it looks pretty okay to at least watch that. But we might see something like this. So be really careful today watching for longs. Amazon, consumer discretionary also with Tesla, minus 2.35. On the daily, Amazon is really not even doing a double top, but it's really having troubles up here. We've been doing that for months, but this is the tricky part on tech. Are we pulling back? Are we reversing? What are we doing exactly? The only thing that it's clear is that everything is red. And that's after Apple's news and after some economic data that I don't think it has impacted the sentiment. I think it's Apple and the AI hype that it's being killed right now. Google also affected by the AI nightmare. Look at this candle. This is huge. 30-minute chart shows you a big push to the upside and then huge rejection. 100% retracement and continue lower. Not even touching the EMA. So the trend is down, the trend is continue. Be careful with longs. Nvidia, the big AI boss. Well, we did some things like this today. We are building some weird price action, some setup. There's no setup here. We only have this gap, another gap, and the huge gap on earnings. So what can we do? I'm not dealing with Nvidia anymore. I just don't care about Nvidia. I just analyze that there's weakness everywhere on the AI world after Apple. Meta, minus 2.60. Minus 2.60. It tried to continue with the gap. Let's adjust this gap right now. And it's, well, it's trying. It's trying. There's 318 to 323. It's the only gap left. And on the 1 minute, despite the Microsoft news of the other day that pushed a little bit higher, look at this chart. Meta is being shorted like crazy. So this is the kind of thing that you have to be watching today. Double bottom, push higher, consolidation, but we might do this or this. You don't know today, but look at the left. Look at this price action. You think shorts are just happy with closing or covering? Be careful with these kind of traps. Finally, the last thing that I would like for you to take into account, dollar, it's up 3.53. We talked about dollar yesterday, and how it's bouncing. We have the fib retracement 61.8 up here above around 102. We are trying to test 100 and reclaim previous support. And I would like dollar to do something like this and then continue building. So watch the dollar because on earnings season, it's really critical for the stock market. That's a fact. Yields are super hot today, 2% on the 2-year, and the 10-year is 2.56%. So this is a bounce relief, or it's actually showing signs of increasing rates from the Fed. So let's talk about that. Let's do a quick check of that on the CME Fed Watch tool, 99.8 for 26th of July hike. And then nothing is changing until March of 2024. We have higher for longer and then start cutting. So nothing has changed in the big scheme of things, because tomorrow, let me share with you, we have nothing on the economic calendar. Tomorrow we have nothing. So when we have no news on the market, we usually tend to continue higher, not higher, but to continue the trend, the active trend. And the sentiment, just watch the sentiment. The sentiment is just red. The only huge catalyst that Nasdaq and tech are showing is AI. And Apple is entering this world and has caused such a big red flag that we really need to pay attention and to digest the price action, the news, and to just give it time for the market to decide what it does. Because I've been seeing throughout all this week huge block orders on the Nasdaq futures, and those are big sellers. At some point, we have to pull back. Let's see where do we pull back and how we get there. Because a pullback here, it's one thing, but a pullback here, it's another thing. And if we do something like this with a lower high here, that's the first sign of a trend reverse, and we might continue lower. So be careful with the tech this week after all this news and the shakeout, because there's no economic data. Next week we have the FOMC 100% priced in 25 basis points, and let's see what happens. Day by day, step by step, we have to watch the market. My recommendation for today is just to take it easy. Going with the trend is always easier. You can just try for some longs, but have really, really big, huge risk management, because we might see some things like nasty rejections of pre-market lows or this pivot, while everyone's saying, oh, we are going to reverse. Be really careful with that mentality today. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos for market forecast, market updates, and market recaps throughout all the week, and sometimes, more than not, in the weekends, weekly recaps for you to be on top of the weekly in a summary manner. So thank you for that. Thank you for being with me. Thank you for your subscriptions. Thank you for your support. And let's see what happens today. There's a lot of day still ahead. This is an early video because I would like to really share with you guys my sentiment already. And maybe you agree with me. Today is super tricky, super difficult. 2 days of chop and more chop. And maybe it's not worth for you to continue trading. So that's for you to think about that. Thank you for your time. Remember that discipline and risk management are key for success. Stay safe, everyone, and see you tomorrow.